welcome to our next in our series of one-time only webinars. I'm delighted today to be joined by Paul and Kirsty. Let me just give you a bit of background. Paul Surtees is CEO and co-founder of Capitalise, which launched in February 2016. So welcome, Paul. For those of you that aren't aware of Capitalise, it's a capital advisory platform. Paul and his team work with about 2,000 accountants across the UK. They have some exciting new tech and tools to share with us as part of the webinar today, but I won't go into those. I won't steal anybody's thunder. We'll let Kirsty and Paul talk around those. And also welcome to Kirsty. I know that some of you will already know Kirsty. I've known Kirsty for a long time, more than 15 years. So Kirsty's the founder of the Corporate Finance Network and has a specialism in corporate finance. Just to put it into context with Capitalise, Kirsty is Capitalise's accountant in residence there. And helping lots of the accountants that work with the team there to make best use of this platform. Okay, we are recording this webinar today, so we will make an on-demand version available after the webinar today. For any of you watching the recording and not here on the live one, hi to you as well, and I hope you enjoy the recording. So as normal with our webinars, if you've got any questions, please use the Q&A tool on your Zoom toolbar rather than the chat. I know Kirsty and Paul are keen to answer questions as we go along. Feel free to put them into that Q&A box, and any that we haven't scooped up, I'll come back at the end for a Q&A session. But at this point, I'm going to hand over to Kirsty and Paul, and I will see you towards the end.
Thank you, Jo. Hello, everybody. Good afternoon. I think we're just on afternoon. Great that you could join us here today. I'm not sure how many of you I know or how many of you know Capitalise or the Corporate Finance Network, but it's great to just be able to introduce a few of our recent thoughts, really, and where we see the market going, and of course to share with you some of Capitalise's tech, which, you know, really impressed me years ago when I started working with Capitalise. Just on the funding side originally was how they started, and we use them at the Corporate Finance Network as effectively our funding arm. So instead of me having to try and keep up to date with everything that was going on in the lending market, which was, you know, just exploding at the time. And you remember when, you know, back in the day when we could have a named bank manager and we knew what our clients' bank managers and we knew how to get hold of them and we knew how to put a business plan into them. And then all that changed around the time that Capitalise started. And bit by bit, we've lost contact with those individual bank managers, and all these new lenders have appeared. I kind of kept up with all the peer-to-peer lenders. I was a bit of an expert in that market, so I was doing well, and I knew what a funding circle did, and I knew what Market Invoice did, and they started, and then became Market Finance, but then all these other lenders started coming out the woodwork, and I wasn't in a position to understand enough and do due diligence on them enough to know what their products were, what their rates were they someone we wanted to work with? Did they have integrity? What was their lending process going to be like? And that's really why I started working with Capitalise with my member firms in the Corporate Finance Network. Of course, looking not just at transactional funding that was needed for M&A deals, but also just for working capital funding, asset finance, invoice finance, whatever it was that our firms' clients would benefit from. And then gradually over the years, I've got more involved and working closer and closer. And obviously lockdown then happened, and we really pooled our knowledge and experience that we were finding, both Paul from the lending market side and what was happening with CBILS, and how difficult it was at the beginning to get that going, and myself from what the accountants were seeing on the front line. So really now working with them on an ongoing basis to really help them understand what's happening from the accountancy side, you know, what you're doing day to day. I work very closely with a lot of firms and can see your challenges. I can also see your opportunities. And as Capitalise have developed their technology and continue to do so, and more products become available, more solutions are available for accountants to use with their clients so that they can become the full capital advisor to their clients. It is just so powerful and so useful for you to be able to have these conversations with your client and have a real impact. So today, really, Paul, if you can just move on to the next slide. What we he's been my Debbie for today. He's going to be my able assistant until he takes over in a few slides' time. But I thought I'd start really with this to just talk you through what happens as you see yourself with your clients, that you'll take a client on and they may be at startup, they may be partway through their business journey, but ultimately a client will go through a life cycle. Now, eventually that business owner is going to have to exit their business, or whether that's selling out to a trade buyer, or maybe even a private equity investor or their management team, or they don't exit and they're not in a position to sell to anybody. Their succession planning hasn't been perhaps very well thought through, and the business goes into some sort of decline. But ultimately, every person needs to exit their business. It is a fact of life. So at some way, shape or form, we are going to see that exit happen. The more involved you can be in that and the more influence you can have on that journey and whether that exit is successful, then the better, because you can work with your clients then along their whole lifetime. And let's face it, we know it's difficult to win a new client, especially a quality business. There's a lot of competition out there in the market, and you may work with a client to bring them in at a certain stage on this journey. You don't want to lose them then. You want to keep them for that whole longevity of their business. And it says here that according to Experian, the average business is established for 8.5 years. But we know that some businesses are only established for 2 years and some are established for 25, 30 years. And we want to make sure that your firm is able to support those clients with the products that they need and the service and the advice that they need throughout that whole journey, wherever they are on this curve. Now, there's a lot of startups, again, partly because of what's happened in the marketplace. And we're just an entrepreneurial nation, but even more so, our younger demographics in our population are more and more entrepreneurial, and that comes because they've been growing up watching Dragon's Den and The Apprentice and seeing all the possibilities of being self-employed, and some of them think it's nirvana, and they might get a bit of a shock when they actually start up in business themselves. But there are an awful lot of younger people in particular starting up in business, and that has continued throughout 2020, and we're seeing the same thing in 2021. When the figures come out, I think it's going to have grown again. So there are definitely things you can get involved in with startups. It's not a market that you want to ignore. When I was in practice, a startup came through the door and we kind of took a bit of a sigh, and we just thought, oh no, are they going to be able to pay us? What are we going to be able to do with them? But actually, those firms that see the potential of those startups and are able to coach them and able to help them scale and help them be more resilient, they're the firms that are going to be really, really successful, because some of those startups will actually fly. So next slide, please, Paul. I feel like that guy on the government briefings that used to say next slide. So what we decided to do then, as the market has evolved over the last few years, I've been seeing that there's different types of advice that you're able to give to your client. And I know advisory is a little bit of a toxic term in accountancy circles. And people either seem to love it or hate it as a term. But the reality is you are always giving this advice to your clients. What we want to help you do is to monetize that advice and be able to scale it so that you're able to develop it throughout your whole client base and throughout your whole firm, and truly be able to keep those clients on board. Now, what we know is that first of all, we have to start with all of our clients. We have to start helping them have that resilience. We have to give them that technical advice. We have to support them with which business structure makes sense for them, and making sure we've got management systems in place for their accounts and all the other app stack that you're going to need to support them around it. And then as those businesses, some of them will show some opportunities where they're going to be capable of scaling and have got an objective to scale, and they don't just want to be a lifestyle business, then you can work with them a little bit more and continue to do that so that they continue to scale and ultimately to exit. Now, it may be that you haven't got a corporate finance team. It may be you don't want a corporate finance team. You may not want to act on the ultimate deal and go and find the buyer, for example, or go and find them a target to acquire. but you can still support that client to get there, and maybe just work with a specialist on the transaction so that you still keep that longer term relationship with the client. And you may do this for less clients than you would the bottom rung of the pyramid, but the more clients that you can work with a wider service of advice, then the increased retention you're going to have from those clients, and the increased fees and average fee value for each client. So I'm going to go into these a little bit more detail now, and you can see what I mean by each of them. So can we just go on to the next one, Paul? First of all, technical advice, as I said, is there really, it's fundamental, whether you bring a client in at a startup stage, or even if they've already been at another firm or been trading without an accountant, then you want to bring them in at this stage and just make sure they're onboarded to your systems, and they're really going to be able to function as a business and develop and have that security of knowledge that they know what their figures are, and they're able to have management reporting in place that's going to help them really run their business, make decisions, and scale. So technical advice will be things like choosing a general ledger, whether it's Xero, whether it's Sage, whichever one that you use, creating a tech stack around them, and then designing reporting systems that you can support them with. So being available for them to help them have training in that, and to make sure that they're using it really well. So that would be technical advice. The next one, please, Paul. You'll then go into the business advice stage, hopefully for the vast majority of your clients. You want to work with them on their strategy. And we know from feedback that we've had from accountancy firms around the country is that the clients that you work with on this really, really value it. They love actually you holding them to account for things that they're supposed to be doing, because we all know business owners are incredibly busy, and what we want to be able to do is help them focus on the most important and urgent needs for their business. And being involved in their board meetings, helping them write a business strategy, helping them plan and forecast where their business needs to go is really crucial role that you can play, and clients will pay for it. Now, around this area, there's two ways of thinking around it. So when you just look at compliance work, and you're only doing compliance work for some of your clients, then you are in danger of losing them to those firms that are offering them this wider service. So that'd be the first thing I would say about a certain demographic, probably being the baby boomers, the Gen X type business owners. They are going to need this at some point, and if they don't think you can provide it, then you are at risk of losing them. But if you are able to show them how to grow their business and how to scale and hold them accountable and be able to demonstrate a real impact on that business, then you're going to have a great long-standing relationship. With the newer generations, I'm finding with the new business owners that are coming through, they're a slightly different culture. They're digital natives. They are very comfortable with going on YouTube and Googling everything and finding out how to do everything. And they may not see the value of accountants just doing their tax return and accounts, which they may think they have a very simple business and therefore they can do it themselves. And they may be wrong, but they may think that. And therefore, they might not be coming to you for compliance work. But I've worked with so many young entrepreneurs and so many that are looking for funding, that what they really want from accountants is they want their knowledge, they want their experience, they want their contacts, they want to pick their brains. And so if you're able to offer these younger business owners, these startups, all of these wider services, then they will come to you for compliance eventually when their business gets more complicated. But in the meantime, you're becoming their real business advisor. And that's how I see the market is going to be developing over the next 10 years, 15, 20 years. Okay, the next slide then, please, Paul. So then we come on to capital advice. So this is obviously where Capitalize absolutely excel. These are where all their products are. But if we don't have the right capital in place for our businesses, then they aren't going to be able to fulfill those business plans. So in order to scale, they do need working capital. They aren't going to be able to invest in marketing processes and campaigns, in new staff, in new equipment, without having cash in the business and capital available to them. So this is really where Capitalize absolutely are fantastic and are able to help you go out to the market in a very efficient way to find the right product, the right lender for your clients. And you earn off it. You get commission off it as well, even better. And you know that your client's in the best possible hands. And you keep that relationship really strong. But where Capitalise have now moved into other areas, we're looking at the whole wider capital function. And we know that credit scores are incredibly important for businesses and becoming more and more important as time goes on. It used to be in small business world that a business owner would deal with another business on the basis of they'd known them a long time, they were good for the money, they trusted them, and it was that type of approach. What's happening more and more is that the business owners are getting a little bit more savvy and a little bit more risk averse, and they are doing more and more credit searches. So they are checking themselves whether they should be dealing with this business, and if so, how much credit they should give them. So if your client's got poor credit scores, then that's really going to impact on their ability to trade with suppliers and with customers. Customers will also use credit scores as a way of assessing the resilience of a business if they want to trade with them. But also it will directly impact on the amount of supplier credit that they're extended. And supplier credit is free. There's no interest on the supplier credit. So the more supplier credit and internal working capital your client is able to access, then the better cost effective it is for them. So looking at credit scores and really understanding what your client's credit scores are, but also are they accurate, or are there things we can do to improve their credit position and their credit score? That's a great piece of advice that you can give your client and be really valuable, probably have an immediate cash flow impact, and it's a product that Capitalise offer. And again, you get commission on that product as well. And it's a no-win, no-fee. So, why wouldn't you? It is, Paul will tell you more about this, but it is, one of our fastest growing products on the platform at the moment. It is absolutely so important that accountants are working with their clients on their credit score. And then there may be opportunities to bring in R&D tax credits, and we know that R&D is not used as much as it could be in this country, and innovation grants. So if your client's innovative or is developing new tech or new systems, then again, these are areas that you can help by bringing capital straight into the business. Next slide, please, Paul. And then we move on to the ultimate pinnacle of the pyramid. The top of the pyramid is the corporate finance and ultimately the exit of that business owner. And I'm a passionate believer that we should have more acquisitions and transactions in this country, because very few business owners actually think about making an acquisition. And it's such a shame, because it could be a real growth opportunity for that business, and it's much faster than organic. And as long as they have the right advice, the risks can be minimized. So thinking about buying a business as part of a growth strategy is definitely something that you'd be able to help with. You'd be able to help fund that. And through the corporate finance training manuals that's on Capitalise that were put up there this time last year, I think, maybe January, maybe, we launched the corporate finance training manual that's available to all our subscribers for free. So there are all sorts of resources on there that you're able to access if your client does want to get into those areas. Of course, if you really want to develop corporate finance, then talk to me about the Corporate Finance Network at another time, and that's what we do very wholeheartedly. But for most firms, they're able to certainly support with this area. And as I've talked about earlier, getting into exit planning, really understanding what makes a business sellable, what makes it more valuable, then those are areas that you can help with as well. And ultimately, you want to make sure that your client sells that business or exits that business successfully, ideally with a capital sum, because we know the pressures business owners are under. You may be a business owner yourself. We've just been talking prior to this call about how stressful it is at the moment for all business owners. Why would you do all that without being able to build some value and exit with it? Why would you be the one that's having the sleepless nights and is missing your holiday times when you are, you could be an employee and earn a salary? You only do it because you want to build a value and you want to make sure that you're going to walk away with a substantial sum. And that kind of is difficult for business owners to do without some support, without your experience and your advice to build that up. Paul, I think I'm handing over to you at this point.
Amazing. Thanks very much, Kirsty, for running through those elements. I think one of the really interesting parts for me to think about here at Capitalise, and the relationship that we've developed with Kirsty at the Corporate Finance Network, and ultimately bringing her in-house as accountant in residence, is exactly that kind of transition into the pyramid, and the sort of unmovable belief of Kirsty's that that every business, and it's a fact of life, does need to exit at some point, and the role that we can all play within this community in building up those businesses to fulfill that function. So I've got the honour and privilege, I guess, to run you through a few slides of Capitalise product, so that you can get some sense of how you might be able to take some of that thinking from Kirsty and how to roll it out within your firm, regardless, I guess, of where you are in the pyramid at this point. I think what you can see on the screen is one of our features called Capitalise Monitor. And effectively, the tool here enables you to bring in your portfolio across the business, whether you're on cloud or whether you are non-cloud. We can accept CSV files and similar. So you can bring all of that data in. And ultimately, what we are trying to do is to give you a portfolio view from a capital perspective of what your clients look like, so that either as an individual or across your entire firm, you can take a view on the health of your business, not just from a cash flow perspective, but from a capital perspective. And as Kirsty alluded to, there's a whole bunch of products that we consider to be very important in the balance sheet stack, above and beyond just funding. So effectively, whilst we've got 100 plus institutional lenders here in the UK, and we have delivered more than £1 billion worth of approved capital through this channel alone, just through accountants, we've also moved into a world where we can enable you to not only raise capital through debt, but do it through grants. You can recover capital through debt recovery and dispute resolution products, fully funded all the way through to the High Court. But also you can protect capital using the credit scores that and credit score improvement that Kirsty mentioned. And if you can see within this monitor framework at the moment, you can see different shapes and sizes of clients, and some conversations down the left-hand side. Kirsty was talking about the credit improvement. It's the fastest fastest developed product in Capitalise by a very long way. And the simple reason is that every time you file a set of accounts for your clients, you are going to cause a ripple effect that will mean that every single credit rating agency will rescore that client. Have the accounts been filed on time, or are they a little bit late? Has there been a change of directors, etc., etc., etc.? There's like 92 different factors that determine a credit score. And ultimately, what goes into those final set of accounts and the information that surrounds it will really drive whether a credit score goes up or down. And of course, at the moment, we're going through systemic credit score downgrades because of what's been happening to turnovers in the main in businesses. But taking this kind of example here, you can see the conversation on the left-hand side is all about high fixed asset registers. So within this portfolio, these businesses that you can see in the main body are all of the businesses that are demonstrating a high fixed asset register in the balance sheet. And if we go one stage deeper, we dive into a company, we basically have a screen that pops in from the right where you can understand just some basic high level components. So if I break that out just a little step further into some of the screens that are available there, you can see the sort of balance sheet and the P&L over a period of time. Insights that you may well be receiving elsewhere, but useful when in this environment to reference quickly. What you won't see elsewhere is facility detection, for instance. And so what we're identifying there is the type of loans that we can see and have been surfaced within cloud accounting. So for this particular product, we do need connected accounts through cloud accounting, whether it's Xero, QuickBooks or Sage. We pull that through and you will automatically see what lending facilities, what banking relationships they've got. That gives you a good insight into how they're funding themselves and how they're developing over time. But importantly for this this conversation piece is the identification of risks and opportunities. So out of those accounts, out of Companies House, out of the credit bureaus, the company credit bureaus, not direct credit bureau data, we're pulling various risks and opportunities. So Technitrax, for instance, has got insufficient cash to meet short-term liabilities. And we've already seen that there's an opportunity in there that they've got a high fixed asset register. And so ultimately, that's a business that's showing a propensity to be buying plant machinery and goods that ultimately may well benefit from asset finance. That's odd, but I'm going to jump into it anyway. So we've actually just released a new feature that kind of goes even deeper into the credit score, credit information component. It enables you to have a capital report, and this report ultimately is for you to surface some of those conversations and insights in a meaningful way, where you can develop that with the business, and ultimately you can develop this and send it to a business. The example that you're seeing here is the credit information. So, and you can see that there's an opportunity that's come out of it. And so we're identifying in this particular business that they're a C-rated business, and that there is a very likely outcome that you can improve that credit score and get free supplier credit, as Kirsty alluded to. So no interest to be paid. And some of the examples that we've had in that space have been extraordinary. I think only last month we managed to get 100. A business had been downgraded from the filing of their accounts. They went from £150,000 supplier credit down to zero because of what's been happening. There were a few miscommunications in the filing of the accounts. We managed to get it back up to about £120,000 through a credit improvement, and ultimately, for every 10 suppliers they've got, that's £1.2 million worth of supplier credit over 30 days, which obviously has an enormous benefit to the working capital cycle of that business. So if I just go one step deeper, in here, there are these various components within the credit report, whether it's business performance, credit information, cash and capital, or us exploring the components of some of those insights. So Technitrax, you will recall, had insufficient cash to meet short-term liabilities. In this instance, we surface where that insight's come from. So we've got liabilities with a cash balance, and ultimately there's an insufficient cash amount there. Through our own proprietary data, we calculate what we believe this business can afford over a period of time based on affordability calculations and intelligence that we've got from the lenders to surface the type of product and the lenders that you can go and apply for. So you can snap straight out of here and apply and compare a number of lenders in that space. One of the products that I touched on in talking about the kind of raising, recovering and protecting is this dispute resolution debt recovery. So in this instance here, a debtor book is consuming working capital. And of course, there's a natural opportunity in there to look at invoice finance and how they might be able to surface those better things. But equally, there are components that drop out of there, such as bad debt, that may even go on to be written off. And the product that we can provide you enables you to go back for 3 years. So even though the accounts have been filed, even though they've very likely have been written off by the business in their head, it is possible, so long as there is a contract in place and so long as there's a willingness to engage in that process. It's a no-win, no-fee product that enables a mediation first, but litigation as a follow-up if required, and that's fully funded all the way through to the High Court. And we've got I think we've got currently £1.7 million across. The average invoice size is about £15,000, for instance. And each of these are basically in various stages of mediation and recovery. And at these tough times, before the pandemic, there was £40 billion worth of cash locked up in a commercial dispute between ourselves and our clients. And in the main, small businesses are not willing to take that fight on. So if a business has reached a position where they're unable to take that a step further, then of course, this is a product where you can actually go out without laying down a per hour price on lawyers to explore whether or not this is a solution that might fit. One of the key parts of the Capitalize platform, Kirsty alluded to when she first started using us, we were just about funding. And that was a challenging itself. We had over 100 lenders. As I said, we've managed to get ourselves up to £1 billion of approved capital through this now. But in the March, April, May Kirsty and I were very busy in a program that we called Leave No Business Behind, which you may have heard of, really about just making sure that we're touching and having a conversation with every single business to just try and figure out how, what is the situation of their business? Have they got suitable plans, and have they got the cash and capital that they need to be able to deploy into it? We had bounce backs, we had CBILS, but we also thought, how could we also bring capital into the business and protect it? And so by bringing these additional products through the platform, we built out a new mechanism for you to raise a case. So you can raise a case in any of these products, giving you, a lot of leverage across all of these products. It means that you can put all of these components onto your website, being able to fulfill them, facilitate them, knowing that you can kind of go through that process. And the benefit of using Capitalize in this instance is that you've got effectively a sort of a transaction CRM, so that you can see it. And in this instance, we've got it in a Kanban scheme. Jack and Joan still works as an example. We're pulling out who is the accountant that's driving it, what the product is, how we found it in QuickBooks, and what its status is. And so in this instance, it's a specialist review. So it is sitting with one of the specialists within Capitalize. And as that progresses through the programs, it will get approval, whether it's in debt recovery or funding. It will get approved, it will get credit underwritten, and ultimately your client will either take the funds, receive the funds, protect the funds, and you can progress on. And as Kirsty said, there's a commercial model for all of those components. And I think if starting to just kind of get your mind into any questions, I guess, but to just kind of round this out, we were fortunate enough to raise another tranche of investment into Capitalize in the summer, solely through Experian. It has enabled a partnership that is unique, and then something that we're super excited about bringing to the market. And ultimately giving you the superpowers to see the credit impact on your clients for the benefit of your business, but also for your clients and protecting their own businesses. So we will be the only business where you can get free credit scores and share them with your business. If you go to Experian themselves, you will be paying a minimum of £15 up per business. And so in this instance, we can give you a very dynamic credit risk rating of a business, ledgers, and all of the insights. And out of that, from the monitor platform that you've just seen, you will also be able to power all of those capital conversations up. I think that's it. Just as a super quick sweep, I know that time is always short, and I'm grateful that I had the opportunity to share some of the great tools that we've got here at Capitalize. And thrilled for you to join. If there's any questions, feel free to shoot them through to either Kirsty or myself.
That was great. Thanks very much, Paul, and thanks very much, Kirsty. Really, really interesting. A couple of questions. You may have answered this earlier, Paul, but I wasn't quite sure. Do your clients have to be on the cloud to use Capitalize Monitor?
The short answer is no. The best output that we can get, of course, is where we have cloud accounting. So where we've got Xero, QuickBooks, or Sage, any of those cloud ledgers, we can basically extract the data and we can provide all of that intelligence and insight based on accounting-oriented data. The relationship that we've got with Experian means that we can already, from just a CSV file, extract all sorts of credit information and be able to kind of share that through. Where we're going to be in January, exciting launch announcement coming up, but where we'll be in January is that a business, not an accountant, because it has to be verified through the business, but if they plug their bank account into Capitalize, we will be able to risk score any business all the way down to a startup, and we'll be able to do that for free. As I said, that's
even if they've not filed accounts, isn't it, Paul? Because if they're startups, they won't have filed accounts for a long time. We can still get credit scores for them and help them improve those.
It's a rapidly dynamic, changing space, and in the consumer, I'm sure you'll have seen Boost on TV from a consumer perspective, and we've very much got the opportunity to build into that space. So we have the opportunity to improve credit scores already. Obviously, over time, that will become more and more automated, I'm sure.
Okay. And do you cover all funding products?
I think the short answer is yes, but so the only exception is equity. So we don't raise equity, and part of that is because creating securities and being in that space is just a different regulated environment. Kirsty's probably got a more view on it, but ultimately, designated professional body status afforded to corporate finance type teams and so on. So everything else we are regulated to, so invoice, trade, asset, and then all of the other non-credit products we pull through.
And currently, of course, recovery loans are the big scheme that is around from the government, which replaced the CBILS scheme. And talking to some accountants earlier this week, they didn't know the recovery loan existed. So it's very much there at the moment. It's available until the 31st of December. The government might extend that, as they extended CBILS for a number of times. So recovery loan scheme is something you really want to look at with your clients whilst it's still there, because it's definitely more preferential than better rates, better products than the commercial market will be when that recovery loan scheme finally does end. So it's definitely a point in time. We've got 8 weeks maybe to really work with clients to see whether they need the recovery loan scheme as well. And the monitor tool, if you act quickly and get all this uploaded, will be able to help you identify those clients that may be eligible for a recovery loan and haven't yet applied for one. Even if they had a CBILS or a bounce back before, they're able to have a recovery loan as well as that, alongside that. So subject to credit score and credit assessments by the lenders, but that's definitely a product which is very, very live at the moment.
If I can just add one other component into there, which obviously from a lending perspective is important, is that the schemes prior to the RLS, CBILS and bounce backs, as Kirsty mentioned, were exclusive to each other. You couldn't have a bounce back and a CBILS. What we're finding is that many businesses have bounce backs and CBILS, and it is actually a breach of those government schemes, makes them pretty liable for both. So we've actually just released a new insight into Monitor that actually identifies businesses that have both a bounce back and a CBILS, because you can finance them into a recovery loan, which is then not in breach. So you can actually go to your clients and do the right thing, because those businesses, if found out, will be in some trouble.
I think HMRC are planning to attack's probably the wrong word, but my experience of them is probably the right word. But let's see what happens, shall we? Okay, well, again, thanks very much, guys, for your time. I just wanted to finish off by letting you have a couple of minutes just to let people know how they can get hold of you, engage with you, find out more about you.
Well, why don't I've just put my email up on the slide. Feel free for anybody to shoot something through. I'm happy to kind of coordinate any inquiries internally. If there's any conversations for Kirsty, it's not actually on here actually. Kirsty, what's your email?
kirsty@thecfn.org.uk.
Great, thank you very much. Again, thanks so much for your time. And as I said earlier, we'll make this recording available to everybody who registered, and I look forward to our next one. Thanks, Kirsty. Thanks, Paul.
Thanks for
Amazing.
hosting,
Thanks, Joe.
Joe.
Thanks everyone for joining.